Welcome, everyone. Thank you for joining us for today's Appraisal Buzz webinar, sponsored by Valkyrie. Tax appeals, what, why, and how. We have Grant Norling, MAI, co-founder and VP client of experience at Valkyrie, and Ross Lichtenhouse, CEO and founder of Taxonics. I'll hand it over to you, Grant, and let you get started.
Awesome. Hey, thank you so much, Jim. First, we would really like to thank Appraisal Buzz for the opportunity to present today. We appreciate the resources you bring to our industry. Today, Ross and I are going to explore the property tax appeal appraisal space with you all. What the opportunities look like, why now, why is now a good time to pursue this, and really, how to make it happen. We will also be working through a couple interesting case studies of successful appeals, and we'll leave some room at the end for some questions. Feel free throughout the presentation, as things come to mind, to submit questions through the chat feature to keep things moving forward. We will be working through those questions at the end of the presentation. A little bit about me. My name is Grant Norling, again, co-founder and VP of Client Experience at Valkyrie, the commercial appraisal industry's premier end-to-end valuation platform. It's trusted by hundreds of appraisal firms across the US, Canada, Australia, and emerging markets. I'm a 20-plus year former recovering appraiser that specialized primarily in investment retail assets, anywhere from small net leased properties all the way up to sub-regional shopping centers. As they say in retail, it's detail. Relevant to our topic today, one of my mentors exposed me to the property tax appeal space at a very early stage of my appraisal career. So I have a couple of decades of experience kind of at all levels of the appeal process, primarily retail properties in the Portland MSA area. I'm honored today to be presenting alongside with a real industry leader in the tax appeal space. Ross, will you please introduce yourself?
Thanks, Grant. And as always, it's great to join you. With these podcasts and webinars, you guys have been great partners of ours. Again, so thanks for allowing me to join you here today. Yeah, like you, Grant, I've been in the real estate space for 2 decades now, and it's really been my professional life's purpose to work in the real estate tax consulting space, which I think I fell backwards into a couple decades ago when I moved to Washington, D.C. to go to graduate school. I've worked at law firms, small regional tax consulting, CPA firms, global publicly traded companies, all in the service to solving real estate tax problems. I am the managing partner and founder of Cavalry Real Estate Advisors, which is a Washington, D.C. based real estate tax consulting practice. And then about 18 months ago, we launched Taxonics out of our consulting platform. And Taxonics is a real estate tax technology solution that offers information, tools, and resources to solve real estate tax problems. So again, thank you, Grant. Excited to be here and look forward to diving into this important topic.
Yeah, I really appreciate it. And it's been nice to collaborate with you over the last couple of years. So we're going to hop right into a poll question. I'd like to hear from you guys. What type of appraisal work do you do? Are you a commercial appraiser, residential, both commercial and residential, or are you not an appraiser?
I feel like we need the Jeopardy music in the background, Grant.
We'll have to cue that up.
Next time.
All right, I'm assuming everybody had an opportunity to submit their poll answer. All right, so we're going to get into this, the opportunity. What is the opportunity? I think in the current economic conditions and the cycle we're in right now, I think that all appraisers recognize the need for diversification. Finance-related appraisals have kind of fallen off a cliff, and it's really revealing some vulnerabilities in some business models across the industry. The goal ultimately is to insulate your book of business so that no matter what economic conditions you're in or what part of the cycle you're in, you can weather the storm. So we're just going to start out with today's conclusion, and that's that we see a ton of opportunity for appraisers in the property tax appeal space. We think it's just an amazing opportunity right now, where we're at in the current market cycle, high demand for this type of work, and it's a type of work that provides high margins and a lot of recognition in the industry. Ross, I'll hand it over to you.
Thanks, Grant. So let's get into the why now. I've been working, as I mentioned before, in the real estate industry as a real estate tax consultant. Building teams, leading companies, buying and selling companies, and now in the technology space for about 20 years. And this current cycle, I think, is really reminiscent of the Great Recession. And the forces, I would say, impacting property values now are a little bit different and maybe more complex than they were back in 2008, 9, and 10. But in terms of opportunities to lower assessments on behalf of property owners and to fight over taxation and assessments, the fields, I would say, are as right now as they were, over a decade ago. And so there's a couple things I think that are really important that I want to make sure that we impress upon everybody that's here joining us today and maybe watching this after. And that's that, in addition to a ton of experienced appraisers leaving the industry for a variety of reasons, in jurisdictions across the country, and my company, both consulting and technology, we work in virtually every state throughout the country. And by the way, for anybody listening, the nuances and complications associated with real estate taxes, just to put it in frame it in the context of numbers, there are over 3,000 different taxing counties in the United States, and there are many, many more individual real estate taxing jurisdictions even inside of those counties. And across the country, we are also seeing an exodus of experienced commercial and residential assessors leaving the industry. And I'll just give you one example. Just last week, during an appeal hearing in one particular jurisdiction, I won't name names, I was informed during a very routine first level administrative hearing that every single one of the experienced commercial assessors in that jurisdiction had left in the past year. But it was explained to me not to worry. The assessing office had recruited over 2 former residential assessors to assess and negotiate appeals on those commercial properties. And in this particular jurisdiction, you've got hundreds, probably thousands of very complicated commercial assets like mixed use, hospitality, shopping centers, large office assets are going to be complicated in the current conditions. And I think it's naive to think that those assessors, who are supposed to also be valuation experts, who maybe 6 months ago were appraising a townhome or a single family home, that they would be prepared that quickly to debate the nuances of complicated commercial properties. And so what that means is that there is really a lack of, I would say, institutional kind of valuation knowledge across the board when it comes to real estate taxes. Then to frame this in the context of the opportunity for appraisers and others who may want to work in service of, this real estate tax appeal effort and industry, currently in the United States, by the numbers, there are probably fewer than 2,500 full-time experienced real estate tax consultants and attorneys. And I know that sounds shocking, but the truth of the matter is, for a lot of you, it may come as a surprise, real estate taxes has not typically been considered sexy in terms of real estate services in general. And it just is not something that you typically are taught in school, at the traditional kind of graduate or even postgraduate level. It's not something that you see typically listed as an available job in many of the main kind of job publications. And so there's traditionally been a lack of experienced consultants, and we've got more and more folks leaving the industry every day. And I would say that based on my experience, having done this work for many years, there are even fewer appraisers involved in this that are experienced in this area to provide valuation support as part of the tax appeal process. And so what this means is that it leaves ample room for new experts to really join the fray. And just to put this, again, in the context of numbers, there are over 11 million commercial buildings in this country, over 120 million residential housing units, coast to coast. And in this current market cycle, each one of those building owners deserves adequate access to experts, both consultants, attorneys, and more importantly, expert valuation professionals like appraisals. The other important aspect of this, and this is why you should be jumping into the fray now, appraisal fees compared to normal fee appraisal for refinance and acquisition are much, much higher for this type of work. My consulting firm, Cavalry Real Estate Advisors, we routinely commission dozens of appraisals at a time for various real estate tax appeals across different jurisdictions and across, pretty much every major food group of real estate type, asset type. And the going rate for good appraisers who can do this type of work commands fees, I would say 2 to 3 times that of a normal fee appraiser, in some cases higher. I've actually seen some appraisal fees based on the specialist and the location top $50,000 for a single appraisal for a property tax appeal. And then on top of that, we've got to pay those appraisers, or property owners have to pay those appraisers, to serve as expert witness, which, as most folks know, that's another level of challenge, but another level of expertise that if you lean into can command some very, very high rates. Those expert witness rates in trial can command hourly rates north of $400 to $500 per hour. I've seen them as high as $800 per hour. So the why now is obvious. It's market driven because we're ripe for appeal opportunities, and because there are a lack of specialists in this area. And so you marry those two things together. Anyone that's an MAI or an aspiring MAI or a general real estate appraiser who wants to get involved in this industry, there really is no better time. And it's a really, really good marriage of expertise and opportunity right now.
I couldn't agree more. Hey, thank you so much, Ross.
Mm-hmm.
So, Ross explained eloquently the opportunity and why now. I'd like to touch base on how you're going to get started. So, property tax appeal and valuation, it's a really specialized field. You can't just jump into it blindly. You need to have relevant knowledge, the education, all of those sort of tools to be successful in that space. When you're trying to get into it, most jurisdictions, they're going to have attorneys or other professionals that really focus in on that space. Network with them, network with the key players, absorb industry knowledge, and, share your expertise with them. The American Property Tax Council has a website and a list of different property tax reps by space. Definitely suggest you go to that resource. For me and a lot of folks that enter this space, it is critically important to try and partner with some sort of mentor that can show you the ropes. If you're trying to find somebody that might be able to mentor you, you might ask local tax consultants who they hire for their tax appraisals. There's typically a very narrow segment of the appraisal industry servicing the property tax space. Do as much networking as you can, anywhere from the Institute of Professional Taxation, Appraisal Institute, American Society of Appraisers, IAAO events. All of those are recommended, and don't be shy of just like really putting yourself out there. What appraisers are working in the tax appeal space. How can I get involved, and how do I continue to learn how to drive into this market segment? So, becoming a real pro. This is, definitely an area that Ross can cover like a blanket.
Yeah, thanks, Grant. So there's really a couple things, and I've been in trial with a number of appraisers. I've worked with appraisers, at administrative levels of appeal as well, and there's some very, very clear differences in skills, I would say, that will separate those that maybe are just kind of dipping their toes in the water versus the ones that can really command both rates and demand on their time and services. And I would say the first is to really hone your communication skills. You need to be able to clearly and concisely explain your valuation methodology, both in written and in oral form. You can be the smartest person in the room. You can know everything there is to know about valuation, but if you cannot distill it down and distill your valuation down so other people can understand it, your expertise is going to be lost in the haze of confusion. And in some cases just becomes frankly irrelevant. Because remember, when it comes to tax assessments and tax appeals, most people you speak with are going to have fairly limited knowledge when it comes to valuation methodologies, especially in the context of real estate tax. I mean, if you're testifying in court in front of a property or in front of a property tax appeal board, remember, you could be presenting to a judge who maybe just that morning was there presiding over a case related to contract law and just happened to be assigned to your case that afternoon. Or, you could be sitting in front of a property tax assessment appeal board whose appointed members, hold jobs during the day that have absolutely nothing to do with real estate. And so you've got to be able to learn to communicate clearly and effectively. I always tell my teams, that if we provide data, evidence, appraisals, or any other means of information in writing, it needs to be written and presented in a way that anybody can read it and understand it at all levels of experience and understanding, even if they don't read that report for months after that initial meeting. They need to be able to go pick that report back up off of the desk, follow your logic, your understanding, and be able to come to a conclusion that hopefully, supports your valuation methodology. The second thing I would say is that specialization is key in an asset type or a variety of asset types. I mean, you can be a generalist, but if you really want to be the go-to appraiser for a particular asset type and command higher fees, I would highly recommend that you specialize. And even specializing in certain jurisdictions, obviously appeal volume matters. And so you can pick some jurisdictions that are nearby. And I think for most appraisers, if you understand the dirt, the buildings, the processes, the people, in the area and submarkets, you're going to have a better story to tell, and you're going to have more credibility in your case. So specialize by jurisdiction and asset type if you possibly can. Then I would say probably another very important aspect of this, not maybe, definitely an important aspect of this, is you really have to understand the ins and outs of how a particular jurisdiction or state assesses real estate. You've got to understand relevant case law, burden of proof. You've got to understand how those two factors are going to impact how you develop and you present your appraisal. Our real estate tax platform, the tech platform that we launched, Taxonics, was meant to help solve for that, to offer information and data on exactly how jurisdictions assess and tax real estate, because you can understand how real estate is valued and you can appraise real estate, but if you don't understand it and present it in the context of what is required through a real estate tax appeal process in a jurisdiction, you may be missing key pieces that have your valuation methodology and appraisal thrown out altogether. A competent attorney or consultant working with you should be able to give you appropriate guidance in that regard, but you need to do your own research and educate yourself as well. And then another factor I would say that it will help you really become, a true professional is really to pay attention to market cycles. You need to educate yourself on what asset types are suffering the most, because those are traditionally, when you think about appeals, when you think about appeals kind of in lockstep with market cycles, those impacted asset types, the ones that have fallen out of favor in the market, are going to be disproportionately impacted and frankly are ripe for tax appeal opportunities. And that's everything. Obviously right now goes without being said. I think for most people, office buildings are being impacted tremendously, because of change in remote work, hybrid work, and then just a kind of a trough in the market cycle. And I would say, once you get comfortable and you feel knowledgeable on market cycles and the impact of certain asset types, consider writing articles, consider posting on social media about those trends, and offer your expertise up as an appraiser in service of, assessment appeal efforts. Again, I'd mentioned office buildings are being appealed in droves. That's a great opportunity to talk about the valuation nuances associated with that. And then again, once you get that information out there, consultants and attorneys and building owners that need support from appraisers during the tax appeal process will look to you hopefully as an expert. Hotels and data centers, just speaking of certain asset types, regardless of cycle, either they're hot or they're not. Those are typically misunderstood by taxing jurisdictions for a whole host of reasons. I've actually got a case study later that we're going to talk about related to hotels. But those two asset types, if you're looking to specialize, are complicated and in many cases present unique opportunities. But at the end of the day, you really need to seek out the various educational opportunities that are out there. And Grant had mentioned a few. And the Appraisal Institute has various courses, but I mean, get a live fire experience. Go show up to a public, assessment appeal hearing. Sit there in the hearing, listen, take notes, see how things are presented. Some of that evidence is even made public that's been presented, so you can study that. So you just go down to your local property tax assessment appeal board if it's public or even first level hearings, and just take notes and learn and see what happens right there while it's going on. And in some cases, that's the best way to learn kind of the ins and outs of serving as an appraiser valuation expert during the tax appeal process.
I completely concur. If you can go to an actual court proceedings and see, what the interactions look like, what the questioning looks like, it's going to have you much better prepared. So before we move on, real quick, Ross, as you're looking to hire appraisers, what are the top 3 qualities that you're looking for to be successful in this space?
So I say this seriously, not tongue in cheek. In many cases, the top requirement is just availability. There are just not that many experienced appraisers out there, that can stand up to intense scrutiny in court. There aren't that many that, frankly, understand, again, the burden of proof and the specific requirements associated with addressing valuation in an appraisal for a real estate tax assessment appeal process. So, availability is big. I constantly talk to appraisers that I run into and try to encourage them to start to specialize in this space because it's a need. And it's a much better return on investment in terms of time. So that's one requirement. The second is credibility. As many folks know, if you've ever been in any trial, or if you've ever been in a tax appeal hearing, the expert witness or the individual whose evidence and information is being scrutinized, the credibility of that information or the credibility of that individual is, in some cases brought into question. And just to kind of give you some insight into a typical trial situation. And by the way, I don't want anyone listening to this to think that the only way to provide appraisals for tax appeal purposes is to serve as an expert witness in trial. Any good consultant or attorney is going to resolve 99% of their cases prior to it actually ending up in a trial. But that doesn't mean that appraisals aren't needed or in some cases required at those earlier administrative processes. But if you were to end up in trial, or in some cases just presenting in front of a board at an administrative level, you are the expert at that point. It's not the attorney, it's not the consultant, it's you as the appraiser, the expert, and it's you and your valuation versus an assessor or an appraiser for the taxing district. And so, as you can imagine, it's a battle of expertise, it's a battle of approach, it's a battle of values, and so credibility and experience matters. And so, the more arrows you can put in your quiver, the more notches on your belt in terms of experience and education and certifications and training, the more unimpeachable you will be in serving as that expert appraiser. And so, take the time. And again, the longest journeys always start with one step. So don't let it feel like a daunting experience. Everybody's got to start somewhere. but you need to start to establish that credibility and that expertise. And then the third thing I would say, Grant, is that, depending on the complexity of the property, and usually if you end up kind of at the furthest, reaches of the appeal process in court, in litigation, it's typically because you're dealing with a more complicated asset that you just can't get to a meeting of the minds, or, there's something that is controversial to the extent that maybe it was, you're asking for an assessment to be reduced by 50%, and it's just a bridge too far. Having someone that has a specific expertise around a specific property type is obviously going to carry the day when you're looking for someone that has experience appraising data centers, which are very complicated, or appraising luxury brand hotels. Those types of things matter. So specialization, again, I cannot reiterate enough that if you really want to own a market in an industry or own a corner of the industry as an appraisal expert, offering tax appeal services or appraisals in service of tax appeals, that specialization really matters.
Awesome. Well, thank you for that addition. All right, moving on to the second poll question. Which property types do you specialize in? So retail, office, industrial, you can only select one. So it would be the property type that you most specialize in. What would that be for you, Ross, if you had to pick one?
For me personally,
yeah,
it would be retail. That's retail, shopping centers, mixed use with a heavy component of retail are probably my favorite types of property to value, just given the complexities and nuances and how tenants and their risk profile are affected by sales per square foot. The location of certain tenants, co-tenancy clauses with anchor tenants that are rolling out of a space, and what that does down the line for inline retail. There's just a lot of really interesting factors that tie into retail and shopping centers that, if you're a real estate valuation and a real estate tax nerd like I am, just makes it really fun to figure out what those properties are worth.
I couldn't agree more. Okay, so we've kind of gone through the opportunity, why it exists, how to become a pro. Now we want to get into, what are the effective solutions that you can be offering to the space? First thing is, just really understanding the types of appraisal products and services that are needed. And that's going to be kind of dependent on, where your engagement occurs. If your engagement occurs at the property ownership level, you could look at potentially analyzing an entire portfolio on some sort of, restricted basis, just to determine if there are any opportunities available in that portfolio. Once you get into identifying, the opportunities that are present for a successful appeal, there are typically lots of phases or multiple phases associated with the appeal process, starting with the Board of Appeals and ending in some sort of tax appeal court proceedings. Just to provide an example of some phased appraisal tax services that one might be providing, you might look at providing a service contract first and foremost that clearly defines each phase of the process that you're going to be working through. Phase one would be looking at researching and validating a supportable value that could be presented in a restricted appraisal report that could be used in conjunction with the Board of Appeals process. Phase two would be completing a full appraisal that's litigation ready, that's all the I's dotted and T's crossed. And then phase three would be to make sure that you establish an equitable time and charges billing rate for any additional meetings and court proceedings that you take part in. You're going to want to really align yourself with the best tools in the industry, and to make sure that your appraisals are maintaining consistency throughout, and then that there's no errors. So teaming up with a appraisal software provider and getting those technology solutions in place are going to be really key to your success. Really be prepared to apply some different techniques and learn in the space and get to understand, what sort of levers need to be pulled when you're trying to convey your appraisal reports specifically for property tax appeals.
Greg, would you mind if I added something here?
Oh yeah, absolutely, Ross.
To that last point, because I think that this is germane for the current cycle that we're in, and it certainly was as it related to appraisers, back in 2008, 2009. Talking about different techniques, right? When there is a down market cycle, in some cases there's a lack of really good information and data. And as everyone knows, valuations are driven off of data, and there's good data and there's bad data. And in many cases, there are jurisdictions that may be under-resourced or maybe using data or have a lack of data to be able to support things like an appropriate capitalization rate or decent market rents. And so what really kind of interested me about that last bullet point there, you talk about band of investment approach or weighted average cost of capital. With rising interest rates in this particular environment, and almost with lockstep jurisdictions being typically 12 to 18 months behind what's actually happening in a market. And it's not always their fault, by the way. It really has to do with the way that they gather information and how they have to prepare assessments for thousands of properties, well in advance of a valuation date. In some cases, they're accessing or using data that is just not relevant or current related to a market cycle. And so you as an appraiser, being able to come in with better data and a better explanation in an environment when maybe there haven't been a lot of trades or sales for a particular asset type, so there's not good capitalization rate data, or some of those sales are lagging, or I should say, or the interest rate increases have been lagging those sales. You've got to come in and say, hey, listen, I know you've got capitalization rate data from sales last year, but we've seen interest rates almost double in the last 12 months. And that needs to be factored in. So a weighted average cost of capital or band of investment technique in some cases is going to be the difference between a proper valuation and an overassessment. And so understanding those different techniques, especially in an environment like this, pays huge dividends.
Yeah, absolutely. All right, so we're going to roll into our first case study. Ross is going to be presenting first. I cannot wait, Ross.
Thanks, Grant. So I wanted to talk with you guys today about a case that went through Maryland Tax Court that we litigated, and it was a full-service hotel. And this property was constructed in 2019, had almost reached stabilization shortly before COVID hit, and it went from stabilized cash flow to negative almost overnight, as many hotels did. And this was probably one of the more interesting cases, just given the timing of the construction, the fact that this property was severely impacted by a once in a 100-year pandemic, hopefully once in a 100-year pandemic, and then what that meant for valuation. And the valuation date on this property was January 1st, 2021. And so as anyone can imagine, trying to sit down and figure out what a full service hotel is worth as of January 1st, 21, that had just been constructed, a couple years prior, and was going through, again, the depths of just a really horrific period, both in terms of our personal lives as well as the real estate market. The valuation there was a challenge. And you throw on top of that the fact that valuing a hotel for real estate tax purposes in and of itself, even absent a pandemic or a severe sharp decline affecting that industry, is already challenging. And so when it really comes down to valuing a proper hotel or valuing a hotel properly, it really comes down to what's the proper approach to valuation. In this particular case, there was a disagreement over whether it should be an income capitalization model or it should be a cost model. And for us, where we ultimately ended up was leaning heavily on an income capitalization model. So just if you will, just entertain this kind of going down a rabbit hole here for a second in terms of how you properly value a hotel for real estate tax purposes. So when hotels typically trade, they trade as a going concern. They trade as a business. When someone goes to buy a hotel, they're not just buying the building, right? In many cases, they're buying the brand. They're buying the personal property, the intangible property associated with it. The training, the workforce, everything that comes with buying that business. Because if you think about it as someone that, if you're going to pay to stay at a hotel, what are you paying for, right? You're not just paying to stay inside of a building. You're paying for the use or the luster of the brand. You're paying for, the bed, the desk, the TV, maybe access to food and beverage. So there are all these things that are wrapped up in the business of the hotel that you're paying for that drives the income or the daily rate that you pay, which then drives the income down to the bottom line NOI that the owner of that hotel benefits from. Now, legally, from a real estate tax perspective, the jurisdictions are only able to tax the value of the real estate. And so when you think about trying to bifurcate or extract the value of real estate from all of the other non-real estate related components associated with that real estate or that hotel, it's very, very challenging already. And then you throw COVID on top of that, and the timing of when this hotel was constructed, and you've got a really, really challenging valuation exercise. And so there was a lot of debate over if you had to properly value just the real estate for this hotel, would it be income versus cost? And where we ultimately ended up was it was an income capitalization model. Now, this process for this appeal, it took 2 years for us to resolve this. And we started this at the administrative levels. My firm, we were able to reduce the assessment on a couple different occasions, but just given the impact of the bottom line and where we felt and what we felt this hotel was worth, even coming out of COVID, expecting for there to be some uptick in reservations, some recovery, we just felt that the value that had been reduced to was still not the appropriate value. So we engaged an MAI appraiser who specialized in appealing hotels and asked him to develop a trial-ready appraisal. And through that, we landed on the income approach, as I mentioned before. And the trial outcome, the judge ruled in favor of the taxpayer. So he ruled in our favor, and the value in this particular case was reduced from 25 million down to 19 million. Now here's where it gets kind of interesting. So again, the income capitalization method is the most relevant approach. And for those of you that may be familiar with hotel valuation, there's the Stephen Rushmore approach to income capitalization for hotels that factors in, again, not only the daily rates that are achieved, but also FF&E, return on and of, to get down to a net operating income that's relevant for a hotel. What was really interesting about this, for those of you that want to take some time offline to research hotel case law for real estate tax assessment appeals, is that for one of the first times in any court in the United States, we were able to achieve a modification to the Rushmore approach. So in the state of Maryland, they had adopted the approach of valuing hotels to income capitalization on the Rushmore approach, and that is effectively, again, taking your rents, deducting your FF&E, return on and of, deducting expenses, and getting that to an NOI and then capitalizing it. What we were able to have included as part of that is a modification, and that modification allowed us to include a return on business startup costs. And we could spend hours, and I know that there are folks out there that have done webinars on hotel valuation for assessment purposes, talking about the nuances associated with this. But the important part is, because of our appraisers' expertise, because of our expertise in understanding the difference between valuing hotels for going concern purposes, that would transact in open market, and then valuation approach for hotels in the environment within the state of Maryland, within the rules and burden of proof requirements and approaches to valuation, we were successful in modifying that Rushmore approach to include a return on business startup costs, which ultimately drove down the NOI, and when capitalized, resulted in a value that reduced the assessment in favor of the taxpayer. And so I use this case study as an example because, one, finding an MAI appraiser or any appraiser that specialized in valuing hotels and understood how to value hotels within the context of how the state of Maryland, through relevant case law, required you to look at these properties was absolutely critical. And then back to my further point 25, 30 minutes ago, Grant, when you were asking me about kind of top three things or what it takes to become a true professional, having an appraiser who could, one, withstand the scrutiny of the state's attorney, withstand the scrutiny of very, very difficult pointed questions from the judge and our own attorney, and then be able to explain all of the nuances of how you value a hotel to some individuals in the room who I would not consider hotel valuation experts, was really the deciding factor in this case. It was a battle of experts, And so I put this up there not to say that this is the typical type of hotel appeal, but one, we were successful, so it's a great case study. And two, it required a specific expertise from the appraiser. My team's great. We did an awesome job at the administrative levels of appeal. But once you get to court, you have to have a third-party appraiser who that becomes the deciding factor. Everything that we've done leading up to that point can't, and some will be entered in as evidence, but it's a battle of experts. And so getting the right appraiser for this specific type of hotel valuation with this specific type of expertise was the deciding factor. And it was a trial that lasted over many weeks, and we were successful. But it really came down to the competency and understanding of an appraiser, and luckily it worked out in favor of a taxpayer.
Awesome. So, Ross, how were you able to identify your top gun appraiser?
Because it is a very small pool of individuals here on the East Coast that are familiar with the submarkets that we were in, that also had experience serving as an expert witness in a hotel tax appeal case. And again, I'd mentioned earlier about credibility. There is there's a process at the beginning of every trial where the opposing counsel can effectively validate, or in some cases question, both sides can do this, question or validate the expert witness that's sitting there on the stand, either to establish credibility or to discredit. And the fact that our appraiser had the experience, had the relevant articles that they had written, and frankly a resume and a CV that really had them stand out and spotlight them as an expert witness and someone that really understood how to appraise hotels. That was the deciding factor for us, because you just cannot roll the dice in a case like this that's so complicated with someone that can't sit up there under scrutiny on all sides and explain a very, very complicated valuation methodology. And so, for many appraisers that want to specialize in cases like this, which, by the way, hotels, in many ways, because of the personal property component, the business intangibles, the non-realty aspects of this, in many cases are typically overassessed for one reason or another in jurisdictions. And if you specialize in these types of assets, you can command a pretty high rate because you just don't have that many people to choose from. Yeah,
absolutely. And hospitality tends to garner higher appraisal fees anyways.
Yes.
All right. Well, thank you so much for that case study, Ross. That was really insightful. Next case study is on me. This is actually a project that I worked on as an expert witness, completing multiple phases of appraisal and consulting. It's a retail shopping center, grocery anchored center in Portland, Multnomah County. Built in 1989, 18,000 square feet, consisting of one anchor space, junior anchor space, and quite a bit of shop space. Kind of your typical neighborhood shopping center. Main issues, the large long-term grocery tenant, Food for Less, they were in the process of vacating as of the effective date of value. That was a known fact. It had a 45% analyzed occupancy rate, which is well below a typical stabilization rate of maybe 90-95%. So the county assessor, they didn't factor any of the value implications that this shopping center's vacancy was going to have and its impact on value. The appraisal that I developed appropriately appraised the property based on its existing conditions as of the effective date of value. Run through kind of the process that we worked through and some key dates. The effective date of value was January 1, 2014. In the fall of that year, I completed a restricted appraisal, engaged directly by the property manager that was trying to lower the taxes because of these vacancy issues. And typically taxes are a net lease. On net leases get reimbursed by the tenants. And so as you can imagine, with over a 50% vacancy, they were looking at a pretty substantial slippage in operating expenses. So they were doing everything that they could to pull those expenses down. The results of the restricted appraisal were that there was an opportunity to fight the taxes. The resulting value was below the assessed value. So the client chose to move forward with the second phase and have us draft an appraisal. And that was engaged by their tax attorney that they hired once they identified the opportunity. About another 5 months later, final appraisal report that included, a lot of fine-tuning of very specific topics that had to deal with tax law in Oregon, and that had relatively nothing to do with the appraisal and opinions of value themselves. In fact, those didn't change from the date of the restricted appraisal report, interestingly. So that kind of wraps up, the first two phases, and then, most often appeals are resolved somewhere in the phase 1, phase 2. Rarely do they go to court. I went just a little over a handful of times over 20 years, and after representing dozens and dozens of cases. So this one did end up in trial. April 2018, we went to trial. They had a ruling about 4 months later. The county and Department of Justice, they ended up appealing the decision because they wanted to set some case precedents. And the final ruling from Oregon Supreme Court came in October 2018 after a grueling 4-year property tax appeal fight. So outcome, the court ruled in favor of the taxpayer, lock, stock, and barrel. Assessed value moved from 13.6 million to 10.1 million, spot on with my appraised value. It set an Oregon tax precedence on dealing with non-stabilized vacancy, specifically investment type properties. Lessons that we learned from it, occupancy does matter. It impacts the value of investment type properties, not just retail. Size matters. The Marketability of this particular space was impacted because it was a little bit too big for the smaller grocers. It was a little bit too small for a major grocer. So they really needed to make some concessions to attract any tenants that would help revitalize the center, if you will. Specialization was totally rewarded throughout that process. If you read the ruling, very deep concepts that I developed in the appraisal report were brought right into the ruling, and all kind of helped build the case of that my valuation and opinion of value should be taken with the greatest level of authority. And when you're developing an appraisal for tax court purposes, concepts like foreshadowing and tying issues together, it's really critical. Moving over to Ross real quick, he's going to give a very brief description of Taxonics and the sort of services they provide.
Yep. Thanks, Grant. Before I do that, I want to answer, there was a question that came through in the chat from Danny Buckwalt, who I think ties in well with what I'm going to talk about in a second, but he had a question about how appraisers can generate business or originate business on their own without having to go through consultants and attorneys who seem to gobble up most of the business, I think, in his words. And I'm gonna tread carefully here as it relates to USPAP. And Grant, I'm gonna lean on you a little bit on this because I want to make sure that I'm correct about this. Most real estate tax consultants and attorneys perform tax appeal work on a contingency fee, meaning they are compensated based on the amount of savings that are generated through the appeals process. My understanding is through USPAP, an appraiser performing or developing an appraisal for tax appeal purposes cannot be compensated based on the success of the case. Is that correct, Grant?
I believe that is the case almost universally. There might be some exceptions, a couple states perhaps.
So Danny, to your question and to others that are listening here, if you're out soliciting business to say, hey, I can help provide an appraisal that'll support you in your effort, and meaning me talking directly to an owner or a landlord saying, hey, I know you're not happy with your assessment. I'll put together an appraisal. You've got USPAP, an appraisal institute, and other certification kind of requirements and bounds on what you can do professionally to help support that. And in many cases, you're going to have to charge a flat fee. And so when you're competing against attorneys and consultants that are, hey, I'll appeal your property, but you only have to pay me if I save you money, and you're compensated, on contingency, and you're asking someone to hire you to develop an appraisal that may or may not indicate a higher value, but you're looking to be paid a flat fee or hourly. It's a challenge. It's a challenging value proposition in the market altogether. Now, with that being said, interestingly, one of the reasons that we launched Taxonics was to take information and data directly to real estate owners themselves. And I know that sounds like it's incongruent. It's incongruent with the consulting aspect of my business, but the truth of the matter is, there are vast numbers of commercial property owners out there that do not have access to any kind of expertise whatsoever to help them, one, analyze an opportunity as to whether or not their property is overassessed, and then two, successfully take it through that process. And so, this sounds crazy, but I fully support the idea of valuation experts that understand the appeal process, like appraisers, to go directly to the property owners themselves. And with the proper training and education and information, you can certainly do that. Just know that there are going to be some restrictions on how you can charge, and that might be a difficult hill to climb. If they're out there searching for an expert that is saying, hey, I'll help you through this process, and I'll even, do the valuation for you. And you don't have to pay me unless we're successful, but you go in and say, I'll help you, but you got to pay me up front. Again, that can be a challenging value proposition. So it's just something to consider. And within the traditional kind of context of fee arrangements in the industry, that's why most of the time, appraisers are engaged after a consultant or an attorney has been engaged by a property owner. But again, just given the lack of expertise and number of individuals out there, you as an appraiser could still find that there's quite a bit of demand for that. Now, with that being said, and again, I'm going to tread carefully here. Just because you're an appraiser doesn't mean that you can't do tax consulting work. You just have to not wear your appraiser hat, meaning you just can't. It can't be called an appraisal, and it can't be developed under USPAP. So you can do the valuation work, but then you're just basically a really, really good, well-trained appraisal expert or valuation expert that is serving as a real estate tax consultant. And you have to be careful with how you develop that valuation, what you call it. You certainly can't call it an appraisal, in the traditional kind of USPAP requirements, but you could still work as a real estate tax consultant. And I will tell you, when I built consulting firms and I sold consulting firms, having someone that was formerly an appraiser that's now just working as a real estate tax consultant, doing this type of work has certainly benefited. But you can't put together an appraisal, in the traditional means and present that, because there are USPAP requirements that you all are bound by. So again, if I've misstepped there or if I've kind of misstated anything, I apologize, but that's generally my understanding. But there is still opportunity, Danny, for folks to go directly to the source. It's just got to be done in it's got to be done in a different way. And again, you've got to recognize, the challenges in terms of the way that fees are structured here in the industry. Okay, so back to my slide here. Thank you. So Taxonics, again, is a real estate tax technology platform. And, we've gone through a number of different iterations in terms of products and solutions for what we offer. And we're really positioned ourselves to do one thing, and that is to provide information, tools, solutions, and data to solve real estate tax problems. Traditionally, when people think about real estate tax, it's almost always focused on real estate tax appeals. And of course, that's important. And one of the challenges with understanding how to identify whether or not your assessment, whether you're overassessed, is understanding the nuances of a jurisdiction. And so one of the things that we have done, that we offer, is informing individuals about exactly how jurisdictions work, how properties are assessed, the methodology, the statutes, the burden of proof, the timing, when things are appealed, growth in tax rates and values, assessment comps. And we've got products for any property type, any deal type, any jurisdiction of the country, where if someone says, hey, I need to know exactly how real estate taxes work, how they're assessed, and if I appeal, how I go through that process. That's information that we have collected, categorized, and we sell as part of our platform. The other is forecasting. And I've been beating this drum for as long as I've been in this industry. And that is, tax appeals are great from a reactive perspective, meaning you got your assessment, you don't agree with it, you want to save yourself some money. But I think, as any good deal person will tell you that's in acquisitions or development, that works in the real estate industry, you would initially much rather forecast the taxes correctly on a deal to make sure you don't walk into a landmine and then have to clean up, a missed real estate tax assumption in your deal pro forma. You'd rather make sure that you accurately forecast that at the beginning. And so one of the things that we offer are real estate due diligence products. And that is everything from real estate tax assessment comps to real estate tax forecasts to what we call jurisdictional insights, which allow acquisitions and development teams to understand exactly how they need to forecast real estate taxes for a particular deal type anywhere in the country. Due diligence is the name of the game to make sure that you preserve yield. And then the other thing that we offer is learning and education. And that's, I think, one of the reasons that, we partnered up with Valkyrie, and one of the things that we've been espousing in the industry. And so we very quickly learned that we needed to build an educational tool to help people understand how the industry works, not just how assessments and appeals work, but I've been on this mission to try to get more people into the industry. And I can't harp on this enough. Yes, I have a consulting business where we provide these services, and I know it sounds like it's kind of a defeating mentality, but there aren't enough of us out in the industry. And so we wanted to build an educational tool to help folks learn how to start these businesses, to offer these services. And so one of the things that we built in partnership with a couple different companies was a level 1 real estate tax services certification course, and it's Taxonics certified. And what this does will tell you how the industry works, how pricing works, how assessments work, how appeals work. It's 2 to 3 hours There are quizzes and tests throughout to get this certification. And some folks, it's taken them as long as 6 hours because they start and stop. But we wanted to put an educational tool together where people could learn how this business works and learn enough to be dangerous. And then more importantly, to Danny and others who have asked about, how do you sell direct? I have an entire sales and marketing piece in this course that will tell you how you need to position this and how the pricing works. And again, how you build the business successfully and what that sales script looks like. So we just released this not too long ago. I would advise everybody, if you're interested in dipping your toes in the water of offering appraisals for tax appeals, or even, kind of putting on a different hat and serving as a real estate tax consultant. This is the only course of its kind. Trust me. We went out there and looked for courses that, we hoped that we could somewhat duplicate and supplement. It just didn't exist. So we built the course ourselves. Please check it out. It's a wonderful tool, and I would love to get feedback from anybody that takes it. And what I will promise you, anyone that takes this course that has follow-up questions, wants to know, and is interested in getting into the industry, you can reach out to me personally. My job is to evangelize this solution to solve real estate tax problems for the industry. And this course in Taxonics is the manifestation of that feeling over 20 years and my effort to make it happen.
Awesome. Thank you so much. So Valkyrie and our support of appraisal services for taxes. We're the commercial appraisal industry's trusted technology leader. We support tax appeal space through specialized engagement and reporting templates with ISO 27001 and SOC 2 certifications. You can be confident that your information that is entrusted to you is secure in your platform. Valkyrie is a great platform to grow your business and help optimize appraisal production with end-to-end support. And Valkyrie is your tax appeal partner. Valkyrie, our team provides the industry's best training and support to help you get through the adoption process so that you can become a tech-enabled appraiser. So is tax appeal appraisal for you? Ross, do you want to take this one?
Sure, I can. I think this particular slide really just does a great job of kind of bringing to center all the things that we've talked about. Getting into tax appraisal is not just about kind of changing mentality. In order to be successful, you're going to have to network. You're going to have to sell your services, right? Because it is nuanced, and in some cases, folks understand, and I'd say pretty much universally, anybody that's ever, purchased real estate, developed real estate, rented, a unit understands what an appraiser is and what an appraiser does. But appraisal for real estate tax appeal purposes, not necessarily. So networking and letting folks know that you are in the game as an appraisal providing real estate tax services, real estate tax appraisal services, is what's going to be key to helping grow your network. And that's really the goal here, right? You've got a down market cycle where fee appraisals are drying up, and you're trying to generate revenue. And I can assure you, if you specialize in this, your ROI and the amount of money that you make providing appraisals is going to be significantly greater on a per appraisal process than it is doing fee appraisals. You may get their own volume in an upcycle on fee appraisals, but nothing beats the profitability on tax appeal appraisals. And with that, technology is the name of the game. Valkyrie's done a phenomenal job of building out a platform that helps, that will help help appraisers manage a high volume of appraisals. And once you start getting into a number of different jurisdictions and asset types, and you're managing docket schedules, maybe with multiple attorneys or tax consultants, you're really going to need a really good technology to help you manage that, to stay on track, because deadline is the name of the game. If you don't submit appraisals when evidentiary requirements require you to do so, it can throw a monkey wrench into everything. And a good piece of technology like Valkyrie's platform will help do it. And then, of course, tuning your own horn here, our jurisdictional information and data from a tax assessment perspective is second to none, and that's the business that we're into. And so if anybody's looking to get started in a particular jurisdiction and you want to understand how it works and get something turnkey and get good data, come to us. We'll make it a hell of a lot easier for you as opposed to digging through an assessor's website or trying to do your own research. That's really, one of the commodities that we traffic in. Specialization, cannot stress this enough. Both these case studies that we talked about today, I think, really put a fine point on that. That if you want to dominate, if you want to be the go-to, and again, you want to stop having to sell and market, you want people to come to you, specialize, get your name out there and say, hey, listen, I'm the data center appraiser, or I'm the office appraiser, in Portland, Oregon, or I specialize in large shopping centers for REITs. People will start coming to you because there's really, a lack of experts that specialize in this area. Mentorship, as with any industry, can't be stressed enough. Don't bang your head against the wall and try to go down a rabbit hole of Google to figure out how this works. Meet up with a mentor. I can tell you, I know a number of appraisers, and I actually should have brought this up earlier. I know a number of very successful appraisers who got into the tax appraisal game because they partnered up with someone that was looking to age out or retire. Those kind of established appraisers took them under their wing, and because of the amount of work that was coming in, they simply brought them in. In some cases, did a fee share, and that person was kind of an additional, hired gun. And then through that mentorship process, those younger appraisers not only made money, they got trained up. And when that established appraiser decided to retire, you're ready there to take over the business. And so it's a great way. It's a great way to learn, and it's a great way to establish yourself and set yourself up for a really good, solid stream of business down the road. And then again, knowledge, it's all about education, right? Because you're going to have to hold up under scrutiny. You need to understand why tax appraisals are different in process and form in some cases than a regular appraisal. And so that knowledge and understanding is going to be absolutely key to help establish yourself as an expert. And then the last thing that you need to know, the reason that all of this is important, the reason that my job exists, the reason that the real estate tax industry exists is because real estate taxes are the single largest operating expense for any piece of real estate. And they comprise, in some cases, 20 to 70% of the total operating expenses at a property. It is a major expense. And in a down market, when you're having trouble with vacancy, occupancy, rates are resetting to a lower market rent, and everybody is kicking and scratching to try to save as much money as possible to make it through this downturn, real estate taxes, which are typically modeled out as a fixed expense, soon become variable. And you, as an individual, again, in service of helping control those costs, become the coolest kid at the party. And so you are solving for a major pain point in this cycle. And again, given the size of this expense, it's a major pain point in any cycle. So it's a great opportunity and an excellent value proposition as an expert in valuation to solve problems, real estate tax problems, for real estate owners, investors, developers, and landlords in the real estate industry.
Well, thank you so much, Ross. Great perspective there. We're going to move on to our final poll, and it looks like we are running really out of time. We've gone over, and so we'll be wrapping it up. Last question. How likely are you to offer property tax appraisal services in the next 12 months? Very likely, likely, not likely, or I just don't know. All right, so what we're going to need to do is collect all of the questions that we got today from Jim and look at how we might be able to feed back to the audience. How does that sound, Jim?
That sounds great with me. I really appreciate this time. This was a great topic. I think we probably could have gone another hour on it. We did get a ton of questions in, and I know you guys touched on a couple of them while we were going. Is there any that you want to just quickly point out before we go, or should we take them all offline?
Oh, if you want us to stick around for a few minutes, we'd be more than happy to.
Yeah, it's not like it's going to shut off. We have a little bit of time. If there's any that you want to take care of before we go, I'm all for it. It's up to you.
Ross, why don't you take the pick of the litter?
Sure. So I had actually just, Matt Nolan had submitted a question and I just responded back to him thinking we didn't have time and told him that he could email me offline if he wanted. Matt had asked a question, do you find it problematic when assessors readjust every year as opposed to applying ratios? I'm going to maybe answer that two ways. One, when they do readjust annually, in some cases, there's a better chance of them accurately valuing real estate according to market cycles. And with that, selfishly, I will tell you as a consultant or having a consulting company that appeals assessments, it also presents opportunities for them to make mistakes and gives us opportunities to help folks save money. From a ratio perspective, so there's a good and bad of that. And again, selfishly, anytime there are mistakes, we step in, and that's again how we make money fixing those problems. From a ratio perspective, Matt, kind of further to my due diligence comments about forecasting real estate taxes, real estate owners, investors like predictability. And because real estate taxes are such a big expense, when you apply ratio increases and, Prop 13 comes to mind in California and other places where they can accurately forecast real estate taxes on an annual basis, it removes quite a bit of heartburn and removes some of the pain points of trying to budget and forecast real estate taxes. Because I have seen recently, even coming out of COVID is a great example, for jurisdictions that will reassess annually. In some cases, in a year-over-year basis, nothing changes in their methodology, meaning they're telling me that the capitalization rates, the rent assumptions, the operating expenses, lease-up absorption time frame, from pre-COVID to COVID and then post-COVID have not changed, is the most ludicrous proposition I have ever heard in my life. And so in some cases, it really works to the disfavor of the property owners when they don't factor that in. And so it's a hard question to answer because it can work to their favor, it can work not to their favor. But I do know that real estate owners much prefer predictability. So from a landlord ownership perspective, anytime they can say, great, unless these 1, 2, or 3 things happen, I can expect my real estate taxes to increase at what you would typically think of in kind of a 2 to 3%, maybe CPI increase.
We have one here from Katya. Do you need to be general to do tax appeals, or can a certified appraiser do it? And do you need to train before becoming a general to do these?
Grant, you want to take that one?
Yeah, that's a great question. So based on my understanding, there are no special certifications needed to work in property tax appeal space. The certifications are whether or not you can appraise certain property types based on those certifications. So if you're wanting to do a property tax appeal on a single family residence and you have your residential certification, then that's fair game. You can't have your residential certification and do a property tax appeal on a commercial asset because you're not licensed to do that. So it follows the general licensing of the industry.
Looks like we've got another question here. I want to take this question because I love it. David Zaccardi, do you have any recommendation on how an appraiser can best become educated on establishing time and billing rates for court? Ask for as much as you can get. If you don't ask, you'll never get it. No, but and I do mean that. But in all honesty, you could reach out to attorneys or consultants that do this type of work, and they can tell you. One way that I like to think about things, though, is that you guys, if you're an appraiser, you've taken the time to build an expertise, and it's a valuable expertise, and do not discount that. And if you've taken the extra step to become an expert in providing tax appraisal work, don't discount that either. Think about what your time is worth. I mean, time is the most precious commodity. It's finite, right? You're not going to get any more of it. So think about what your time is worth and think about it in terms of opportunity cost as well. And then depending on the way that your business is set up, if it's you as a sole proprietor or if you've got, a team of folks that help you, then you've got to think about profitability too. And so I'm probably not telling any business owner something that they don't already know, but make sure that you maintain profitability. But know this, know this, that if you specialize in this and someone is asking you to bid on a project, you're probably not competing against dozens of other people. And so you can ask for those higher rates. My experience has been that for appraisers who are hired for expert witness court or for court testimony, the hourly rates after, and again, this is after the fee for the actual appraisal, which in some cases can range anywhere from $5,000 up to $15,000 on average per appraisal. Your hourly rate probably shouldn't be anything south of $250 to $300 an hour.
Yeah.
Truly.
Yeah. I completely agree. When I was with a national firm, my rate was creeping up to $400 an hour. When I was running my own company, it was a little bit north of $300 an hour.
The highest, you're worth every penny, Grant, and then some.
I know.
The highest hourly rate that I've personally paid for an expert witness for an appraiser in court is just north of $700 an hour.
Wow.
Yeah. And do not feel bad about billing every single hour that you put in, because you're the expert in
That's right.
In this matter. And so and if they want you to show up to every single day of court and you only testify for one, you got to bill them for the whole thing, because they're taking your time, and there's opportunity costs with it. So the case study that I presented, the fee for phase 1 and phase 2 to get to a final appraisal was $7,000. The fees for expert witness testimony and court appearances were well over $10,000.
Yep, that's pretty spot on. Grant, do you want to answer this question from Bob? This is interesting.
Yeah, why don't you read it to me?
It says, does Valkyrie have interest in developing a tax appeal template, and what resources does Taxonics offer that could be integrated and automated into that process? Bob sounds like he's trying to broker a deal here.
He's talking about
this guy finder's fee, man.
You talking about partnerships, Bob?
Yeah, what are you talking about?
I recognize that name. Inherently, our platform is robust enough and covers virtually every single property type that it's set up for tax appeals. There's various nuances that you have to account for in terms of, do you have the appropriate market definition of market value, and how you want to set up your arguments on adjustments, so on and so forth. We work with our clients to help them build out their templates the way that they want to use them. And it can look a little bit different when you're working property tax.
Yep.
And in terms of partnership with, I'm sure I know that Taxonics has services and product that would help with that process. In terms of an integration, we keep chatting.
We do. Yeah. I mean, I have seen Valkyrie's products and the templates and the workflow and the processes, and it really is second to none. So you've got a great template in that software. From a resource perspective, what Taxonics can offer, we talk about the nuances associated with jurisdictions, meaning valuation dates, appeal deadlines, tax lien dates, methodology, burdens of proof, all of that you would need to know, basically how you need to think about your appraisal in the context of assessments. That information we do offer for different asset types and for different jurisdictions. And so, if you think about it like this, it's Valkyrie's going to help you actually produce the appraisal, manage the workflow. They've got great data feeds as well. You can think about Taxonics as providing the context, right? The context for how you need to think about the approach to valuation, both for the particular property type as well as that particular taxing jurisdiction. We do not have, an integration right now through an API or anything else, but yeah, we do keep talking.
Well, guys, this was absolutely amazing information. I really want to thank Valkyrie for sponsoring this, and Ross, thank you for joining us. Grant, this was great information. We do have some more questions, but we'll get that to your team afterwards. They can answer them offline. This is being recorded and will be available for people to stream if they want to go back and watch it. I think that anybody that joined this should want to jump on this opportunity and get started on this. This is a great opportunity.
Oh, thank you so much, Jim. Really appreciate the opportunity. Again, Ross, great to partner with you on this really great opportunity in the marketplace right now.
You bet. Thank you, Brandon. Thank you, Jim.
Yeah.
Everybody, thanks, everyone.
Yeah, thanks everyone for joining.
Have a great day.
See ya.